What's going on, guys? So I just recorded a couple of videos. They had absolutely no sound. I forgot to turn the sound on. So 20 minutes spent of making videos. Come to find out, no one can hear me. I'm going to recap the first one. I'm going to make it a little bit short because I just ran through this again. But anyways, so what I'm going to go over is the 20 SMA plays here. Now I'm going to change my chart a little bit here. I'm going to bring up a couple of more indicators on the screen. We're going to actually look at the 20 SMA. We're going to look at the 200, which is the yellow line, and we're going to look at the linear regressions, which is the black line that you see. Now, off the open today, let me start off by saying that today, by no stretch of the means, was an easy day to trade. The ranges were very contracted. The moves, although did set up, they didn't provide a lot of follow through. Some of the setups worked, some of the setups did not work. So depending on, which one you took, right, which trade that you took, you could have either been green, you could have been red. That's the name of the game, right? So again, with trading, just because you understand and you have a strategy does not necessarily mean that every day is going to provide an opportunity where you're going to make, a crap ton of money, right? Sometimes, some days, your setups, they seem like they never work, and sometimes they seem like they work too easy. In a day like today, when the range is very contracted, it kind of gives you a little bit of mixed emotions, right? But if we kind of look at the day where we were setting up at in the pre-market, you can see at 625 right before the market opens, we get this 20 SMA play that does set up over the 20. Your stop loss would be here. Your entry would be above this reason why candle. Now, this reason why candle was a range of 22.5 points. I want to point out something here because a lot of people could get trapped on this move. Let's say you don't take this trade on time, like meaning right when it confirms. You take it a little bit on the way up because you think that the market's just going to continue to break. It immediately pushes up and then pulls right back down. However, if you get into the trade where you're supposed to, which is here, right when as we confirm, you would have gotten paid a 1-to-1 on this trade for 22 points. Depending on your position sizing, it could have made or it could have made your day, right? I mean, if you're trading multiple contracts, 22 points, definitely could have taken some cash. Now, if you were looking to make more than 22 points and try to get 2 hours, 3 hours, and ultimately you probably got stopped out because the market did pull back. Now, this next setup here is a wide candle, a very, very big candle, 41.5 points that does not pay at a 1-to-1. So you could have gotten stopped out of this trade, as it started to climb back. I believe that everyone should have the 200 on their chart, right? Why you should have the 200 on your chart, it just acts as another level of supply and demand. So if you did take this short position, maybe, right, if you're smart and you have confidence in the setup, you could have taken your profits into this 200 period moving average. Now it sets up between a low price of 17,990 and it goes all the way down to 17,966. So you get about 25 to 35 points on this move. Again, I understand it's not a 1-to-1 because 1-to-1 would have been 40 points. But if you understood that this 200 is here, maybe we want to take profits into demand, because remember, stocks are going to go from supply to supply and demand to demand. Normally the first time, again, not 100% of the time, but normally the first time we run into an area of supply or demand, it tends to kind of stop or overshoot it or kind of trickle around. So if you took this short position, I would hope that you took something off the table here and then kind of just broke even. Now, your next setup that does confirm, it does not also pay for a 1-to-1 right off the bat. It does do it later. Now, this candlestick here, your stop loss would be here. Your reason why top would be there. Your entry would be here. It immediately pushes up and then pulls right back down. Right? So it's during this time when it's pulling back down, you get a little bit anxious because it's coming close to this stop loss. Again, if you're kind of waiting for this to close below your reason why, you would have never gotten stopped out and you ultimately would have gotten paid way up here at the top. But again, I can see how someone could take this trade and then, get restless with it and then just sell out. And then next thing you know, the trade's going in their favor. So again, I want to keep something very, very clear and precise. If you're going to stop out, okay, this is the reason why you're taking the trade. If you're going to stop out when we close below your reason why, then I don't care what it's doing. You need to hold the trade until it stops you out. There is no ifs, ands, buts, or in between. It's either we're taking profits close to 1-to-1, at 1-to-1 or higher, or we're getting stopped out. There is no reason to get sad or anxious or mad when we're pulling back. Again, it's the name of the game. Every setup is not going to work. Every trade's not going to pay. Every trade's not going to be the same. All a strategy is just providing you a little bit of an edge and having rules to follow when you're in the trade. Now, we do get a beautiful, before we get the beautiful long setup, we do get a little bit of a setup here that would have gotten you stopped out for around 22 points. Now, again, you can start to see here, you have a setup long, you have a setup short, you have a setup long, you have a setup short, you have a setup long. You can already see within the first 1 to 2.5 hours that the market is extremely choppy in this zone. So you have a couple of decisions to make. Either you manage to scrape out a few bucks and you're going to call it a day, or you've taken 1 or 2 trades and you're at a negative, meaning you're down, you're red, and you're going to stop out on the day. Or if you continue to trade, understand that you're not going to give away all of your life savings and ruin the risk of you potentially, as I drop the microphone, potentially, blowing up an account just for the sole fact of chasing every single move. Now, this trade here, although it was a loser, immediately sets back up for a long position. Now, again, if you're a type of trader who has no trust or little confidence in your ability to take to take these trades and have the confidence to take these trades, one thing that can happen to a trader is that, if you take a loss, you're a little bit scared to take the next trade. And I get it, you're human. So you tend to start cherry picking trades, meaning, you ignore this one, you take this one, you ignore this one, you take this one. You have to take your setups, right? You have to take your setups as long as you're sitting at the screens and you're trading. If you're not taking setups, it's because you're either stopping on the day at a loss or you're stopping on the day for a profit. But if you're still sitting here trading, you have to continue to trust your strategy. Because for everyone who got stopped out on this short position, there's other people who made money on this long position. This was a 25.5 point range, pays for a full 1-to-1 here. You have another short setup that happens here, 15 point range, pays for a 1-to-1, and then the market starts to get extremely choppy again here. No payout here, no confirmation here, no payout here. This one pays, and then this one also pays. But again, you can see how frustrating of a day it could have been. So in order to be a really, really good trader, you have to start identifying emotional control. What are your realistic expectations? If you're not getting paid the way you normally get paid, then it's time to close the computer screens down. Whether you're up $50 or you're down, $200. If the moves are not being presented in a manner, in a fashion where you can control them and you can, be on top of your P's and Q's, you need to sit out of the market. So again, very, very tough day today. If you did have some troubles, again, everyone had some troubles as well. Everyone's looking at the same chart. It's not like you're seeing anything different. Everyone is looking at the same thing. What's going to help you with these 20 SMA plays is at least getting this 200 here. It would have saved you in this particular situation here. You could have also caught a bounce here on this particular situation here. And then going into the close, you can see once we did lose that 200, it started to flush into the after hours. But again, very tight range here. Market essentially went nowhere. We did kind of take out last week's lows by just a hair and then kind of pushed back up. So everything was going from the top of the range back to the middle, from the bottom of the range back to the middle and up to the top and so forth. So again, once you start to identify that price action is not the best fit for you, you either need to stop trading on the day, whatever your P&L is on the screen, or come back tomorrow altogether and not take any trades. Last thing you need to be doing is chasing every candlestick up, every candlestick down. I like to trade the hour before the market opens and at least the first 2 to 3 hours after the market opens. So essentially there's about a 3.5 hour window where I try to take some trades, and that window is going to be in here. And if I can't get something to pay me within this window, I tend to just start ignoring the rest of the day, because again, I'm not going to, have a heart attack trying to force something out of nothing. So I hope this video helps you guys. Again, sorry about the audio. But if you like this video, make sure to like, comment, subscribe, and I'll catch you guys on the next one.